Some quick tips on self-employed borrowers. For any of you who are self-employed, please look out for these factors before you actually submit an application or just ask questions about it. So factors to consider for a self-employed borrower. An individual who has 25% of greater ownership in a business is considered to be self-employed. The following factors will be analyzed for approving a mortgage for a self-employed borrower. Length of self-employment. Fannie Mae generally requires lenders to obtain a 2-year history of borrower's prior earnings as a means of demonstrating the likelihood that the income will continue to be received. So if you're self-employed, you at least need 2 years history. So that, and you're gonna have to provide documentation on that. We were actually, before COVID hit, we had a 1-year tax return program for self-employed borrowers. In those situations, you actually provided a P&L, profit and loss, that could be created by the borrower. And that was practically it, aside from any CPA letter or tax preparer letter that said that you were in business for at least the last 5 years. But things have changed. Banks have gotten a little bit more strict. A person who has a shorter history of self-employment, 12 to 24 months, may be considered, as long as the borrower's most recent signed federal tax returns reflect the receipt of such income as the same or greater level in a field that provides the same products or services as the current business or in the location in which or he or she had similar responsibilities to those undertaken in connection with the current business. Aside from that, verification of income. The lender may verify self-employed borrower employment and income by obtaining from the borrower copies of his or her signed federal income tax return, both individual returns and income tax returns. So if you're a corporation, you're probably filing 20s or 1065. Those are documentation, business tax returns that you have to provide. If you're a Schedule C sole prop, you probably provide the Schedule C. That shows your profit and loss, which in other terms, if you're a corporation, would be your income statement. Completing Fannie Mae's cash flow analysis, Form 1084, or any other type of cash flow analysis, which we provide and we help and guide with, is a document that we will have to provide the lender once we submit your file. So that's very important information that we have to extract from your tax returns and provide it to the lender. You are welcome to check out that form, and I'll provide it in the link so you can look at it. Analysis of borrower's personal income. The lender must prepare a written evaluation of its analysis of self-employed borrower's personal income, including the business income or loss reported on the borrower's income tax return. So they're going to look at your personal tax returns and see what the losses are, but it's sometimes important for us to look at your business tax return to see if we can actually add back any income if we don't see that there's enough income on the personal side. So, and if that's the case, also if you're providing possibly the down payment from your business accounts, those are other factors that we have to look into. But all in all, always feel free to reach out to us so we can provide you with an analysis and see where you're at with your income and see if you qualify, or if you're trying to look out for, to today's market, you're trying to lower your payment. It's very important to look out for, at least you want to be able to provide that P&L and possibly 2 to 3 months of bank statements if it's not a certified P&L. If it is a certified P&L, sometimes the lenders will not request those 3 months bank statements because it's actually certified by your CPA, and that's very important for them. So if you guys have any questions, feel free to reach out to us. These are our Chatham Mortgage Partners. Please share, like, comment. We really appreciate it. Thank you.